Hey guys, what's going on? It's your big dreamer and doer, G Dinero, coming to you today with another TA Tuesday. This time, September 9th, 2025. We're going to talk about Bitcoin, Solana, MicroStrategy, Tesla, Nvidia, all your favorites. But first, remember, none of this is tax, legal, financial, investment advice. It's your buddy G Dinero helping you increase your financial literacy to help put you and your family on that path to financial freedom. So let's dig in. And first, let me give a special thank you out to @Tommy Twista and @Dave Costigan 2046 for their very, very gracious comments here on the thread. Tommy said this is his favorite episode so far. This is a few days ago. It went through the initial setup in detail as well as the risks, included a comparison to the alternatives, discussion of the underlying assets. In terms of the lesson plan, you nailed it way better than just copy trading. That was in response to the video I made on Poor Man's Covered Call. That came out on Friday. I'll go ahead and throw a link to that right here. And he did say the only thing that was missing was the Friday intro clip, the Mufasa clip. Yeah, I didn't put that one in on this last Friday. And then Dave said, thank you, Gary. Your videos each week do more to help investors than anyone I know. And man, thank you so much for saying that, Dave. That really means a lot. I try hard to get that content out that's going to be impactful, something that you can actually put into action immediately instead of just hypotheticals of what could or should happen over the next 3, 5, 10 years. It's what's going on right now and what you can do about it. So let's dig into the charts. All right, as we always do, we're going to start off with the Bitcoin TABI model. And the TABI model has remained light orange. Light orange means it's slightly overheated, typical of being in a bull market, right? Yellow is neutral. Anything cooler than that, the greens and blues mean that we are below the mean, let's say, on the Bitcoin TABI model, and anything above yellow means we're starting to get overheated. Light orange, then dark orange, then light red, then dark red. We still have a long way to go there. Not a whole lot has changed since last week, except we refound, you can see it right here, that we've recaptured this 100-day moving average, and we are resting on the short-term holder cost basis. Again, thanks to Check on Chain for those numbers. That's where I pull the numbers from, and I update these lines on a weekly basis, those white lines that you see there. So true market mean is down right around 78,000, and the short-term holder cost basis almost $110,000 right now. Meyer multiple just barely a click over 2. Our MVRV score just continues to go down close to 2 right now. So those numbers are very cool, so to speak, for Bitcoin. It's not running red hot right now. And you can see the historical volatility also has come way, way down. I mean, it's down here at like 14 or 15. Not a lot going on. We did have this spike over the last couple of weeks and then just right back down to pretty much zero volatility, trading sideways, a lot of accumulation happening right here at the short-term holder cost basis. Same thing will show up on the daily chart. I know some of you guys, somebody commented that my charts are really busy. They are. I have every different indicator on here, and in my course, I break down each individual indicator from the VRVP to the linear regression tools to the Invest Answers IADSS system, which you see on here, RSI, MACD. I also have the liquidity on here at the bottom, right? Liquidity is right back up to the all-time high. The all-time high was on July 1st. And global liquidity right now is banging right back up against that $99.86 trillion level. So we're getting pretty close. Anyway, charts look busy, but I know what I'm looking at whenever I'm looking at them, and it helps me to be able to help you determine where these levels are. So right now we are sitting on that current support zone, that green. If you remember this green rectangle that I drew that way back here, starting back in May. It's been on my charts now for months, and you can see we went down to the bottom of that zone and now have supported in that zone, and we're on our way back up. Where will we find resistance? We'll find resistance starting at 115 and extending all the way up to 120, with it peaking somewhere around the middle of this zone right here, which is 118,000. So that's the line in the sand. That's the line to beat. We get back up over the 50-day moving average. That'll be the first resistance right here at around well, actually, the first resistance is where we are right now at 113. Then we've got to get over 115, we'll call it. And then the next big hurdle is 118. Once we get back up over that, we'll take another run at the all-time high. When and where does that happen? Again, a lot of it is a factor of global liquidity. It's a factor of the treasury companies. It's a factor of the ETFs. They're controlling the game right now with how much they're buying every day. What's the support to the downside? Short-term holder cost basis around 110. If we were to lose that level all the way down to about 107, next is 105. Do I anticipate going that low? No, but can we assign it a non-zero chance? And the answer to that is also no. We've got to assign it at least some probability that we could go back down there again, maybe one final flush before the big move up that everybody's expecting, especially with them lowering the interest rates in about a week from now, a week and 1 day from now. Next up is the Bitcoin 4-hour chart. On the 4-hour chart, what you'll notice is I had a linear regression channel climbing from April 7th until today. Why did I turn it the other way? Well, because on a shorter time frame, we've been making a series of lower highs and lower lows. Now, again, this is on a 4-hour time frame, a little bit different than the daily. On the daily, we're still climbing up right now on the daily. But on the 4-hour, we have been making a series of lower highs and lower lows. What do we need to see? We need to see this start to climb back up again, and that tells us we're starting to make a series of higher highs and higher lows. That could very well be happening as we speak. This right here could be the bottom. We make a high, we make higher lows. If this continues up and we make a higher high, let's say up here right around the 50-day moving average, and pull back to a higher low, we have officially changed the trend or the regime, right? We're now making higher highs, higher lows. So we have turned from a descending trend into an ascending trend. Could that happen? Absolutely. Could certainly happen. We'll see that we're slightly mean reverted to the upside on the mean reversion model. RSI is slightly above 50. MACD is above the neutral line. So we are a little bit overheated right now. We're starting to make our way into the upper 1/3 of the confluence clouds. When they squeeze, remember this lesson from before, when these confluence clouds squeeze like that, usually whatever the prevailing direction is the way that it breaks out. So notice that broke out to the downside. We are starting to squeeze again right now with the confluence bands. That just means there's less volatility. If this is trickling upwards like it is right now, at the time they're the most squeezed, then typically we will break out to the upside. Not always, but typically. So keep your eye on that. Notice here, they squeezed, the band squeezed. What were we doing? We were prevailing going up, so we broke out to the upside. Squeezed. We were trickling down. Where did it break out? It broke out to the downside. I hope that helps you guys understand the confluence clouds, or if you're using Bollinger Bands, the Bollinger Band's a little bit better. If we pop over to the Solana Bitcoin pair, yay, this one's finally going in the right direction. We are making a series of higher highs and higher lows. That's why this linear regression channel fits very, very well. Since the 22nd of June, when this pair bottomed out, we're now starting to climb back up to the upside, making higher highs and higher lows. We're starting to knock on 0.002's door. Where do I see the main resistance? See this white line that I drew across the chart? That white line has been support and resistance. It's really a zone in between this red line up here and this green line down here, these rectangles that I created. It's really a zone in between those two. But this white line, once we break above it and close above it, we should see this start making a run at this red rectangle right here. That means that from the bottom, which was at 12.0012785, that was the local bottom. Once we get to 0.0025, which is right up in this zone right here, that would be a double from the bottom. That means that officially Solana would have doubled the performance of Bitcoin from that point forward, from the down here on the 22nd. So if down here you were going from Bitcoin into Solana, then once we get back up to the top here and turn over again, let's say we start printing red mean reversion dots and triangles and everything else telling you it's time to go from Sol into Bitcoin, you'll end up with more Bitcoin than you started with down here. That's pair trading as simply as possible, guys. So right now for the Solana Bitcoin pair, looks like Solana is outperforming Bitcoin. We are mean reverted to the upside, so we may take a little breather here, make another run at this white line, and then make our way back up to the rectangle, which is the 61.8% fib level or 0.002 level. Solana on the daily chart, again, nothing but goodness since April 7th. Still maintaining this upward trend very, very well. Making another run at this resistance zone that we've been running at since back here in July, right? We took a run at it back here. It's right at 212 to 218. Made another run at it here in August, another run here in late August, another run in late August, another run in early September. We are currently making another run at it. Once this pops, guys, we are going straight up to somewhere in the, looks like 240 range. Okay, but right now we still have to break through it. We are slightly mean reverted to the upside on the daily and on the RSI. If we go over to the 4-hour chart with Solana, still perfect uptrend, making a series of higher highs and higher lows. So again, how do I know the uptrend? The highs continue to get higher than the levels before. The lows continue to get higher than the previous lows. That is a structural uptrend, we call it. And until proven otherwise, right? Until we flip over and start making lower highs and lower lows. So right now, that's the direction we're headed. Again, the resistance is this blob that you see right here, this red triangle. Why do we keep wanting to call it a triangle? This red rectangle. We are significantly mean reverted to the upside right now, so I wouldn't be surprised if Solana doesn't take a breather. Something I've been doing personally, again, not financial advice, friendly advice. On every one of these peaks, I've been closing out perp trades that I'm in, not getting greedy. I'm closing them out, going into USDC, and then going back into Solana on these pullbacks. Anytime we've gotten a green mean reversion dot to the downside, I've gone back into a Solana perp trade using that said USDC. Why USDC? Because if I exit the trade in Solana and then the price of Solana goes down, the value of my collateral goes down. If instead I exit the trade in USDC and the price of Solana goes down, my collateral, which is in USDC, will spend further. That's a little cheat sheet for you right there. Any questions on that? Book a one-on-one and I can teach you how to do those a little bit more effectively. All right, ETH, because I've been asked about it. ETH's taking a breather, guys. It skyrocketed. I mean, from April the 7th or 8th to present, I believe it's up like 300 and some odd percent. Somebody was asking me this recently. So the low was 1383, somewhere down in this range, all the way to the top. That was a 258% move from the bottom to the top. Absolutely massive move in ETH. What's happened since? It has stalled. It stalled at the 2021 all-time high, went just slightly beyond it, but can't seem to break that $5,000 level. A lot of this was on capital rotation that seemed to rotate out of Bitcoin into Ethereum when Tom Lee started pumping Ethereum again, essentially, and had a new fund come out. Since then, it seems like things are rotating out of Ethereum and over into Solana. Solana seems to be the next winner in this cycle. So that's what I believe is going on. Does that mean that I don't think ETH will go higher? No, it could break this $5,000 level, but this $5,000 is proving to be significant. Very strong resistance. Anytime we get up there, you can see it's significantly mean reverted to the upside. It's super overheated. RSI is way high and it sells off, right? Every time we've gotten up close to this $5,000 level, right now just trending sideways, and it seems like the capital is coming out of Ethereum and over into Solana. So where's our support? Support right now is right where it is. There's been a lot of volume that transpired at this $4,300 level. If that breaks, I could see the 50 going down to the 50-day moving average. And if that were to break down, you're looking at, see these peaks back here, you're looking at getting back to $3,700, $3,800, okay? Again, it's not me bashing ETH. It's me just simply looking at the technical analysis and saying that's the support to the downside, and then resistance to the upside. Immediate resistance is 4,500, 46.5, 47.5, but then significant resistance at 5,000. That's just a level that ETH will have to break through. MicroStrategy on the daily chart. If you look over here on the daily, what you'll see is the MNAVs on the chart. Kind of makes it messy. This is the lowest MNAV that MicroStrategy has been at since, if we use the purple, which is the fully diluted market cap, we haven't been this low since back in 2024. If we use the undiluted, we haven't been this low since all the way back in 2024 also. So over a year and a half ago to be this low on the MNAV. MNAV is a measure of the premium being paid above and beyond the NAV value, net asset value of the Bitcoin they hold on their balance sheet, okay? Typically, this thing likes to run between 1.5 and 2.5. You see there's a lot of volume, or a lot of marks here in this 1.5 to 2.5 range. Anything over 2, it starts to get a little bit pricey and tends to sell off. Anything below 2, it tends to get bought up. Well, now we're below 1.5, okay, and continuing down. On the daily chart, it does look like the trend is starting to level out. So what does that mean? It means that right now, support, we are sitting on this giant blob of volume right here. So this is acting as support. Next level of support down is down here at that 295 to 300, and then below that is down here at 250 to 260 range, right? In this 240, 250, 260 range. Do I anticipate going that low? No. Could we see 300? Yes. Again, it's a non-zero probability, meaning it could be 5, 10, 15, 20% probability we go that low. More than likely holding this level that we're at right here. This is a 61.8% fib level, and then having to tackle this 380 level again, break back through this point of control, this massive amount of resistance at 380, which is also now where the 50, 100-day moving averages are. And first, we got to get back up over the 200-day moving average, which is sitting right around 355, 360. We're significantly mean reverted to the downside on the daily chart. If we pop over here to the 4-hour chart, you'll notice that I did have a linear regression channel going up until we got to July 18th. Since then, I have it turned over and going down. Why? Well, we on a shorter time frame are making lower highs and lower lows. So until that changes, until we find this bottom, that's the current regime or the current trend that we're in. Right now, you see we're sitting on this massive ball of volume right here that we've got to work our way through, get back up here to the 200-day moving average. Something interesting is that the 200-day moving average looks like it's actually turning over for the first time in a while. So if we zero in on that, you can see what I'm talking about. See how the 200-day peaked and is actually starting to trend back down again. We could put numbers on that. Right there at the peak, it was at 357.45, and right now it's at 357.31. So it's subtle, but it's telling you that the 200-day has leveled out. That's telling you that over the last 200 days, the price of strategy is pretty much level or has started to come down from where it was 200 days ago. That's what's causing the 200-day to start to turn over. So something interesting to keep in mind and to look at. Where is support? We talked about that. Support down here at 300. Support down at 250 if we were to break down below that. Where is resistance to the upside? Resistance to the upside is the 355 to 360 range, and then getting back up here into this 380. 380 will prove to be a bit of a hurdle. We are mean reverted to the downside. RSI has been very low lately, as has the MACD. So a lot of buying signals right now with MicroStrategy, as long as you have the belief that they will turn the corner, right? That as Bitcoin's price goes up and as the MNAV starts to expand again, and as Sailor slows down on the ATMing, that's one of the main things, two main things that are causing the stock to be down right now on MicroStrategy. And you guys know I'm a huge MicroStrategy fan, huge Michael Saylor fan. Big mistake on his part to open up the ATM again under an MNAV of 2.5. All that did was suppress the price, right? It lost the confidence in the retail investors, and it's giving the institutional investors a way to load the boats prior to the ultimate S&P 500 inclusion. Right now, they have not been included. That was the other thing that killed the stock recently. Was on Friday. They did not get included in the S&P 500. They were rallying MicroStrategy up to that 340, 345 range and tanked all the way right back down to 325, 330 on the news that they did not get included. I look at it as a way to be able to add additional shares, sell covered calls against it on a weekly basis to generate more income. That income can be used to turn around and go buy more shares of MicroStrategy, more shares of Tesla, whatever you want to go buy more shares of, right? So that's where we're sitting right now on the 4-hour chart of MicroStrategy. Tesla on the daily chart looking strong, continuing to trend and trickle its way upwards. Notice not much volatility at all. It seems like every time we get up just a little bit on Tesla, there's a sell-off and then we pull back and there's accumulation, right? So we are seeing accumulation mode right now on Tesla. You'll notice that it's not mean reverting to the downside. It's not even being allowed to mean revert to the downside. The second it gets back to the mean, it's being bought up. That tells you that people feel that Tesla is appropriately priced right now. Same thing over here. You see every one of these little tiny mean reversion dots to the downside get bought up immediately, and the price goes back up again, forming a very consistent pattern right now. Perfect pattern for selling calls and puts on a regular basis, selling calls on the spikes and selling puts on the dips, buying your calls back. People are like, yeah, but what if my shares get called out? You're missing the purpose of covered calls. If you sell a covered call on a portion of your shares here, bought it back down here, you can use the additional money to buy some extra shares. So if you sold a covered call for $1,000 up here and bought it back for, say, $100 down here because it lost most of its value, it's a 90% gain. That happens in a week oftentimes, sometimes two. So if you were to able to collect that kind of income, you can go buy 3 more shares of Tesla when it pulls back, just about 3 more shares of Tesla when it pulls back. And it spikes. You sell another covered call. Maybe this time you only collect $600. You buy it back for $100, and now you're only able to buy 2 extra shares of Tesla. But you can see you can literally chip away and grow your Tesla bag by doing so. Where's resistance? 360. Same place it's been, same place I've been talking about since late 2024. Right there. We made that level resistance on November 12th, 2024. We hit resistance again on November 22nd. We hit resistance again on December 2nd, et cetera, et cetera, et cetera. Then we used it as support right here. Almost right here. We've been using it as support. Since then, resistance, 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 and resistance. That's the line in the sand, 360. We break that, we're off to the races with Tesla. Until we break that, that's a great place to, anytime we get close to that, if it looks like it's overheated and it looks like it's going to sell off, perfect place to sell a covered call. Not necessarily at the 360 level. You might sell the 370 or 380 or 390 or 400, depending on your level of confidence with those. But just realize that's resistance to the upside, then 380. It starts to kick in again. So 360, then 380, then 400 because it's a psychologically rounded number, and then 420 because it's Elon. And I don't think I need to say anything else. To the downside, where is the support? We have been supporting beautifully on either the 200-day moving average or the 50 and 100-day moving averages. Well, now all the moving averages are starting to converge. We have the 200-day at 330, the 50 is at 325, and finally the 100 is down here at about 318 to 320. So 320 right now, the floor on Tesla. Anything between 320 and 330 buying opportunity per what the chart is showing us right now. Anything up about 360 and above could be either a selling or a selling calls opportunity per what we're seeing on the chart. That's not including any of the fundamental analysis. If you believe that robotaxi is going to be all over the United States by the end of the year, or if you believe that the Optimus robot is going to make a difference in the next few months. It'll make a difference in the next few years, maybe not in the next few months though, right? What does Wall Street watch? The car side of things. We know that Tesla's more than a car business, but that's what Wall Street watches. They don't watch them as an AI business yet. They still watch them as a car business, and they just want to know what's the next 3 months going to be. Interesting to see what they release on the earnings. It looks like earnings are estimated for the second week of October, so that would be interesting. I would keep my covered calls between now and then. I wouldn't go out past that if I were selling covered calls for that reason. You never know what could happen. Could spike coming out of earnings. Nvidia on the daily chart, we finally broke down the perfect chart. Remember, it was just up until the 19th of August. Since then, Nvidia has struggled. It has given us a buying opportunity. We are actually finally mean reverted down for the first time since all the way back here in May, right? End of April was the last time we were below the mean. We've been mean reverted to the upside ever since. And as you can see now, we are finally starting to mean revert to the downside. So keep your eyes peeled for buying opportunities on Nvidia. You can see that on the daily chart, you can see these levels, right? Here's a level right here at around 158 to 160. That should act as support. That's the next level down. If we break this 165 to 170 range that we're in right now. Below that, if we were to break down below, let's say 155, we've got support down here at 144, 145. You do have the 100-day moving average sneaking in here at 150. That would likely act as significant support as well before we even went below that. Why? A, 100-day moving average. B, it's also a psychological level, 150. Nice even round number. And markets, algos, bots, they love round numbers. We are below and using the 50-day right now as resistance, interestingly enough. You see 3 candles in a row where we couldn't get above it. And now we're back below it, starting to climb back up and make another run at that 50-day moving average. Then to the upside, significant resistance is still this 180 to 185 level. If you look on the 4-hour, you can see it a little bit better. We did finally get our first buy signal on the 4-hour chart since all the way back here in April. Is it a confirmed buy signal? Well, if you're playing by the strict rules of the game, not quite yet, because we have a green mean reversion dot greater than 2 standard deviations. Check. Our RSI dropped below 30. That's also a sign of a buying signal. Check. MACD crossed over here. It crossed over again right here. It's looking to cross over again right here. All of those, when it's crossing over from the downside back to the upside, what do I mean by the crossover? See right there, the blue line crossed through the red line. Blue line crossed through the red line. Blue line crossed up through the red line. Those are buying signals on MACD. But the trend hasn't flipped yet. That's usually what we're looking for. So you could do what you hear Invest Answers and myself talk about all the time and front run the trend. For me, this was a buying opportunity. Anything below 170 right now, I'm starting to add shares of Nvidia. I'm not necessarily going in with options because the options market's still a little bit pricey because of the volatility expansion over the last, several months. So the options market's a little bit pricey, but I am starting to add shares. Interestingly enough, I only had options because down here I did the opposite. I loaded the options because the options were dirt cheap. Up here, I'm now starting to add some shares to my repertoire as well. So not financial advice, but just giving you an idea that we finally have buying signals and even drop below the support zone that I had outlined here and almost pulled back to this 78.6% fib level, right? Which has acted as resistance and then support since then. So good buying opportunities there. What's the next one I normally cover? MicroStrategy Tesla pair. Okay, this one, guys, I did finally break down. I had the linear regression channel going up all the way during that time period. However, we made a double top essentially on the pair. And since then, it's been a series of lower highs along the way down and lower lows. And you can see this linear regression channel is tight. When I say tight, what do I mean by that? I mean the Pearson's coefficient. If you look at the Pearson's coefficient, and I'm just moving it out so I can read it, it's 97.3. That means it's been following this with almost 100% from a linear regression standpoint. Where's the bottom? That depends on Saylor stopping tapping the ATM, and that depends on does Tesla execute on their game plan. If Tesla executes on their game plan and it breaks that 360, that means it could go to 380 next. That means this would continue down. On the other hand, if Tesla stalls where it is at this 330 to 360 range, MicroStrategy starts to gain steam again as people say, well, we didn't get into the S&P 500 this time, but Saylor is slowing down on the ATM and Bitcoin's price, let's say, goes back up to 130 or 140. If Bitcoin's price goes up, MicroStrategy's price will go up by default. And if MicroStrategy's price goes up without Tesla's price going up, this bottoms and starts back up the other direction, maybe making its way back up to where the 200-day moving average is, maybe making its way back up to some of these previous levels that we were at before. All right. A lot of ifs. It's why I tell everybody, don't go 100% of your bag one way or the other. Because if right here, when this started to flip up, if you went with 100% of your bag into, you would have gone from Tesla into MicroStrategy, you'd be disappointed right now. But I have one client, for instance, he goes by Joe Biden's daycare on here. I call him JBDC. JBDC did a portion of his bag right here, another portion of his bag down here. And then he was asking, should I do another portion? Well, he's already done, let's say, 50% of his Tesla holdings over into MicroStrategy. And I told him, pump the brakes for a second. Let it mean revert like we think it will, because it is mean reverted to the downside. So we should see this go back to the upside at some point. Might not be immediate, might take a while. But when that happens, then you can always go from MicroStrategy back into Tesla again. And if it doesn't happen and it continues down even further, at least you're holding on to Tesla, which by default then would be outperforming MicroStrategy. What's my rule of thumb? I like to keep roughly a 50-50 mix. I am a little heavier MicroStrategy than Tesla right now because I've moved some of my Tesla into MicroStrategy whenever we made the lows below 1. But now that I'm back to, call it 55-45, 55% MicroStrategy, 45% Tesla. That's not of my entire bag. That's just of that pair. Now that I'm back to that ratio again, I'm cool with it. If Tesla skyrockets, cool. I'm still, of those two assets, I'm 45% Tesla. It just means it'll go to 50. And MicroStrategy will likely go back down to 50 because it's getting outperformed. And I'm back to a 50-50 matrix. If on the other hand, if I'm 55% MicroStrategy and this sucker goes up, I may go to 60% MicroStrategy and only 40% Tesla. And what do I got to do to fix that? Sell some of my MicroStrategy over to Tesla. So I hope that makes sense. I know I've been teasing it. I need to get that pair trading course out. And over here, MicroStrategy IBIT. Let's move over to the MicroStrategy IBIT pair. Similar type situation, right? This all hinges on the MNAV. This was me. Why did I turn around and flip some IBIT into MicroStrategy after we bottomed here and started to make our way back up? Why did I do that? Because I thought at that point we're going back up to where the 200-day moving average is. Also, if MicroStrategy got added to the S&P 500 somewhere in this range right here, right? If it got added to the S&P 500, we're going off to the races. It didn't happen. It's not the end of the world, right? Not the end of the world. I'm currently upside down on this one, right? Ideally, I could have gotten more MicroStrategy with those 100 IBIT if I would have just waited till down here than where I did it up there. But eventually the MNAV will expand again on MicroStrategy. That means MicroStrategy will outperform Bitcoin. And when it outperforms Bitcoin, then I can go from MicroStrategy back into Bitcoin. In this case, IBIT is my Bitcoin proxy because I can do all of this in an IRA tax-free. Over here, you'll also note that I did time it pretty much spot on. We were out of the cloud, right? We were out of the cloud, started to make our way back into the cloud at the point where I made the swap. So that all lines up. Right now, we're back in the cloud, but if anything, we're down near the lower portion of it, which again is a IBIT into MicroStrategy swap. Conversely, up here, when we're up in this range, that's a MicroStrategy into IBIT. IBIT into MicroStrategy down here, MicroStrategy into IBIT at the top. If none of that makes sense to you, make sure that you take my TradingView and Technical Analysis course where I break down not only this pair trade using IEDSS on the left side, but using the ARB cloud over here on the right side. People have asked for updates to the rotation model. I said I hadn't done anything with it these last couple signals because I was already in MicroStrategy. I did make a move into Nvidia as it said to do here. And that's like I was telling you guys, I added more to my Nvidia shares position. This is where I did it. I did it in the rotation model per what it suggested to do. So right now I have started to load the boat in Nvidia, and I'm mostly in Nvidia with the rotation model, right? I'm not really following the hold 25%, trade 75%. I'm kind of starting to go all or none on this thing, like 100% into Nvidia. Whatever it tells me to go into next, I'll just swing 100% into whatever it tells me to go into next. And finally, we've got the MicroStrategy preferreds. Again, STRK suffering because people are starting to realize the likelihood of going over $1,000 a share on MicroStrategy is low. Right now, that's low. And so because of that, the 10-to-1 conversion of Strike into MicroStrategy doesn't look as appealing, and the 8% yield doesn't look as appealing, and thus it's actually trading at a discount to par value. So with it down at $93.80, it's running more like a 9% yield right now than an 8% because you can buy more shares of STRK at 93.8 than you could up at 132.79. What was this exuberance back here? That was people thinking that MicroStrategy was going over 1,000, like going straight to 1,000, going to get added to the S&P 500, and we're going straight to 1,000, right? And then on the other hand, down here on STRF, if we look at that, STRF is just hovering at 111. That's pretty much par for the course. It's running at a premium, but that's basically the dividend. It's a 10% dividend, and it's running 10% above par value. STRD still struggling down here in the 80 range. I think you'll see a little more action here. People will use STRD like STRK. They'll say, you know what, I'll buy it when it's down in the 70s or low 80s, and I'll sell it if it gets back up into the 90s to the 100s. And they're going to trade it like it's designed to be done, like a junk bond, whereas the STRK is probably just going to sit here and hover between 95 and 105 for a while, unless MicroStrategy just absolutely takes off again. And then finally, STRC right here, 97.72. Very consistent between 97 and 98 right now. I anticipate it's going to stay in this 98 to 100 range probably for several months in a row. Why? Because that means it's trading pretty much at par value. People are holding it for the now 10% dividend. It was a 9% increase to a 10%. That means that you're getting 83.3 cents per share every single month at the last day of every month. Okay. For people on fixed income, that's huge. If they put $1 million in there and they were able to buy $1 million worth of STRC, they're making basically $8,500 roughly, $8,300 to $8,500 per month in dividends. If you didn't have $1 million and you had 100,000, you're making $830 to $850 a month. That's just a different way of looking at it month after month after month. Can you take those and drip them, dividend reinvestment program them back into more shares of STRC so that your dividend goes up? Absolutely. Or could you live on it if, again, you're looking to live off of a fixed income? Sure. Let's say you had a $500,000 portfolio and it was all in STRC. Well, that's $4,500 a month, or $4,250 a month, right around $4,000 to $4,250 a month. In many places, if your house is paid off and your cars are paid off and your kids are out of college and married and all those things, you're a retiree. That's plenty to live on. You got that and maybe a Social Security check of $2,000-3,000 and you're living pretty healthily with a $70,000 to $80,000 a year income, right? With a fixed income without the worry of the stock market going up and down, Bitcoin market going up and down. It's just this consistent payout, and it's backed by Bitcoin. And it's over collateralized to the tune of like 6 or 7 or 8x. I haven't looked lately, but it's been in that range, right? Meaning most preferreds are over collateralized like 1 to 2x. This is 6 to 8x. All right. So I hope you found value in that. All right, guys, I hope you found value in today's video. If you did, make sure you smash that like button. Drop a comment below. I read every single comment. I respond to every single comment, at least now while I still can. I will read and respond to every single comment. What'd you like best? What did you learn today? What would you like to see more of? And finally, make sure you're subscribed to the channel. Share this with others so they can subscribe to the channel too. What that'll do is it'll trick that algorithm into showing you more content like this, because obviously you want to learn more about TradingView and technical analysis, and this will help you do so. Repetition is key, right? The other thing that'll help you do so is to book one of my courses. I do a TradingView and technical analysis course where I go over all of the different indicators that you hear me talk about every Tuesday. I have an understanding options course where I go over everything from the terminology in Greeks all the way up to buying and selling puts and calls so that you can combine them into strategies that work for you and hedge your risk, or take your profits, or make an income along the way, whatever it is that you're looking to do. And I have a limited number of one-on-one slots available. All that's available at gdinerocoaching.com. And finally, thanks for tuning in, guys. I'm G Dinero. I'm here to help you increase your financial literacy to help put you and your family on that path to financial freedom. Thanks for tuning in, and we'll see you next time.